Welcome to the most dynamic show in mortgage, banking, and real estate sales. In this business, you need to get things done and dominate. You need energy. Get ready for your dose of Big Skip energy. Adrienne Holmes, welcome to the Big Skip Energy Podcast. How are you today?
I'm doing great, Skip. How are you?
I am fantastic. Now, Adrienne, you are the Vice President of Sales at Highland Mortgage.
That's correct.
Yeah, one of the founding people of that organization.
Yes, sir.
But tell the listeners a little bit more about yourself, what you've been doing, how long you've been doing it. Well, you may want to keep that to yourself. I don't know, but
I am going to keep that to myself. Thank you.
So yeah, just go ahead and introduce yourself if you would, please.
Well, firstly, Skip, I know that you're a Southerner and you have not asked a lady her age.
I would never do that. But that's a little different.
So I have been in the mortgage industry, I want to say over 30 years. And I always dreamed of being in the mortgage industry. I'm kidding. I didn't.
Yeah.
I don't really think.
That's a bunch of bullshit. You have none.
But it's a great opener, right? Because I don't think many of us really intended to get into the mortgage industry. I say it claims us. We don't claim it. But once it has you, it gets a pretty tight hold on you. So for the last more than 30 years, I can honestly say that I'm passionate about what I do. And although the mortgage industry has thrown most of us a lot of curveballs over the year, 2008, 2009, 2011, CDOs or whatever they were, swaps, this, that, Wolf of Wall Street. We've not done ourselves a lot of good deeds at times. And what I decided to do when I got in the mortgage industry, and self-disclosing, I did not have good credit at the time. I paid for myself to go to college. I worked 3 jobs. It took me 6 years to get out, including night school. And I just, I wanted a home. Where I'm from rural Alabama and surrounding areas, and home ownership is still the American dream. So when I moved to Atlanta and I went to buy my first home, people pull my credit and nobody will call me back.
What happened?
So thus my journey in the mortgage industry began. And one of we're actually best girlfriends from high school, who is also in the industry, said, Adrienne, you are really good with numbers and you love people and you always talk about the American dream and you're really passionate about buying your home. And have you ever thought about being in the mortgage industry? And I made a face, Skip, because I had not heard great things about the mortgage industry. I don't know about you, but we were called things like slick willies and used car salesmen. And at one point, I think we may have made the Wall Street Journal's least respected list. So
yeah, definitely in 08, we made some very bad headlines. So
yeah,
but it's actually fun though. I didn't know anything about the mortgage business when I got into it. So yeah, I didn't know reputation. I was like, okay. I got started in secondary marketing. And they were like, "Hey, you're gonna be doing this?" Sure, that sounds good. No idea what I'm getting into.
Same here. I didn't know what an escrow account was. So
escrow, what the hell is that?
Who needs that? It was obviously a huge learning curve. But what I will say, and I don't know if we do shout outs on
Give your friend a shout out.
Shout out to Ed Wheeler at Ameris Bank, who was my mentor. Donnie Crane, who I think is at South State, maybe. He was at Bank South. Also my mentor. I have been surrounded by some of the most, to kind of flip back to us having a bad rap as an industry, I've been surrounded by some of the most incredible mentors that any person in any industry could have. And both of those people approached the industry with both a passion and a really business meticulous type manner. And I had the bug and could never let go because I saw what they were able to do, not only to help their clients, but to help themselves and to help their families and to give back to the community, because this industry, if you put your heart into it, it will reward you for your efforts.
Yeah.
And I think back to when I talk a lot about the American dream, that's all I ever wanted was let me put in as much work as I possibly can and just give me something back, right? And when you're sitting there as a, recently out of college student, and you're trying to figure it all out, and you've got $75,000 worth of student loan debt and car payment that's past due, you're just scratching and grinding and trying to make it all work. And the mortgage industry definitely responded in a positive way to my grit.
That's one of the things I want you to, before we kind of talk about the main thing today, I want you to share, what do you think it is about our business that attracts so many people from so many different backgrounds, walks of life, and so on and so on. What do you think? Because we are a hodgepodge. We're potpourri of different people.
We are potpourri. I love that.
Yeah. And so it's like none of us, I'll say none of us, most of us didn't mean to get into it. Like you said, most of us don't get out of it.
Ever.
The LO numbers declining, that's a different story. But
Correct.
So what is it that keeps us in here?
I think that's a great question. And I do think about it often as vice president of sales, as you said, at Highland, and now in a position to help lead and guide our sales team. What makes people stick in this industry, and why do they get into it? I really think there are two separate categories. One category, I think, are a group of people who have been told at some point by someone they couldn't do something or challenged in some way, whether it's, socioeconomic growing up or, minority or female or disability or whatever it is. Someone told that person no. And then they got in the mortgage industry and said, I don't care what anyone has said about me in my past. My path in this industry is going to be to help others and grow my income.
Yeah.
Don't tell me no.
Yeah.
So I think that's one group of the people. And then I do think the other group, or maybe a combination of both, is a lot of people are teachers. Have you recognized that? And I don't mean certified teachers, but people who are really passionate about teaching others about the value of homeownership and the responsibility of homeownership.
And that's where we are now, right? The people that were the order takers, it's a different topic. I'm not going to get off on a tangent.
Correct.
Order takers, they're moving out, or they're
moving out.
Now we're left with the people that, just like you said, share a similar outlook of, hey, I want to help you by educating you about what this means, because it is a complex, oftentimes very abstract concept. And so people have a hard time wrapping their brain around it. And so they need somebody to help them. So yeah, I think you're absolutely right.
Yeah. And also not just, them wrapping their head around it. Think about it. It's similar to, if you remember when you got married, it was a long time ago for me, and I know it was for you also. And I'm not married anymore. You did a better job of that than I did.
Yeah.
But I can remember when you start talking about, weddings, I was in a lot of weddings, and they would say, oh, you got to do this, and you've got to have it here, and you've got to have after rehearsal, and you must do this. So-and-so has to sit here, and it's this big deal, and you get so wrapped up into it. And as soon as you're out of it, they're like, well, when are you having a baby? Or when are you having your next baby? Right. And everyone's telling you what to do all the time. And that's what I think about the mortgage industry. I can remember when I was originating full time, which was the majority of my career, and I would be speaking to someone, one of the things I always pointed on is everybody has an opinion about mortgages that shouldn't have an opinion about mortgages. Yeah. Your drunk uncle, your cousin, your sister, your mother, your brother. So if we can break it down and eliminate all the outside noise, which also applies, right, to marriage and having kids and all of that, and really focus in on data and educating people, I think that's the best experience. And I really think that's the teacher part again. And when you educate that client, they can walk out and be assured that they've made the decision. So when all the background noise comes in, they can say, yes, Uncle Bob, we have a 30-year fix. We put 5% down. Our mortgage consultant or banker helped us decide that mortgage insurance maybe was the better thing for us. And then you've got, right, Uncle Bob over here. Oh no, you should never have mortgage insurance.
Yeah.
So I think again, it's about people empowering people through educating them about the mortgage so they can own that financial decision,
Yeah.
which is one of the largest financial decisions most people make in their lives.
Yeah, and that's why, and this phrase has been beaten to death, being a trusted advisor, right?
Yes.
We've all heard that for eons and eons, whether you're in mortgage, real estate, doesn't matter what sales, you will be a trusted advisor. Well, think about what you just said. You're not being a trusted teller, one who directs you or commands you. You're not a trusted commander, you're a trusted advisor.
Right.
So you're supposed to proffer your recommendations to these people, but based off of criteria that you can set forth and give them options and walk them through the process. You got to have two things, right? You got to have trust. You got to have advice. That's all you need.
That's right.
And so, yeah, I think you're spot on with those two for sure. Folks that are out there have something to prove, and folks that are passionate about helping others and via education. Yeah.
And the third category are the people who just wanted to make money and it was easy. And like you said, they had a little pad and they wrote down the little order and that was it. And those people are the ones that are exiting the industry.
Yeah.
And that's not true for all, right? But I would say a lot of it is. This is no longer easy street. If
No, it hasn't been that way, honestly, for a while. But I'll also contend that to be the most successful, to be that top tier of originators, it's never been easy.
That's correct.
Yeah, you can make a good living, this, that, and the other, but to be top tier, it's never been easy, right? So that kind of leads me to the main topic for today, which is where we've been and where we're going, right?
Yeah.
Now, obviously, you don't have a magic 8-ball or a crystal ball.
I actually do, and my son's a teenager. We do have a magic 8-ball if you need me to go out.
Well, you know what? We might have to break that out. So, but all the changes that you referenced earlier throughout the years have led us to where we are now. And there, like previous times, there is a lot of, let's just call it what it is. It's a lot of fear and lack of understanding about how some of the current changes are going to impact us going forward. Primarily things like AI, right? Now, I'm not an AI expert. You're not an AI expert, but we do know and understand the impacts of it. But I want you to talk a little bit about, if you would, why you think the modern mortgage loan originator should not be scared of AI.
I love this topic, and I'll be honest with the listeners, we did not disclose what our topic was beforehand, so it's going to definitely be ad lib. But I've thought about this topic a lot with AI because I use it constantly, but more from a chat GPT standpoint, or I don't know the others. I know there are a lot, but I don't use it for data necessarily in the mortgage industry. I use it more for wording or, trying to tie together a sentence. And for me, and this is actually a fact, you could go look it up, the hardest accent all of the AI has trouble deciphering is the Southern accent, number one.
Yeah.
So I think AI has a long way to go. If one of your initial most difficult things as a Southerner is to understand a Southern accent. And I think the second one was New Jersey. Again, you can Google that. I'm pretty sure that it's accurate. So I will say the reason that's relevant is there's a human being involved that has the accent, right? And AI is what it is. It's a computer. Or I don't know, whatever. That's way above what I know. I remember though a good comparison was, and what, 25, 27 years ago when Lending Tree came out. And
Yeah.
when Tree came out, Lending Tree, you could log in to Lending Tree and supposedly it was going to take your information and it was going to disperse it out to all these different lenders and compile data and give you the best interest rate at a efficient, non-human type process. And I can remember being called into a conference room and everyone saying, well, get ready. The Lending Tree is going to put us all out of business. They're going to go down and get the best rate and send it out to the client. And Lending Tree was a nightmare. I don't know if you remember, but to me, I compare it to trigger leads.
Well, that's the thing. So, like when I made the switch, when I decided I was going to be an originator, and I think I told this before.
Yeah, you did.
Yeah. And, it was early in the refi boom in the early 2000s, right? And I didn't have a book of business. I didn't have any established contacts, anything like that. And what I had to do was I had to find a company that would say, okay, we're going to take a chance on you. And like you said, this was right around that same time that Lending Tree kind of popped up, and they fed, get your information, we'll feed it out to lenders when banks compete, win thing, right? And so that's actually how I started originating the mortgage business, was being fed Lending Tree leads. You dial for dollars, which there's something to that.
Yes, there is.
But there's also, just like you said, it's not as a smooth of a process as it was presented, because what would happen is customers would oftentimes, they would get overwhelmed, they would get confused, they would get annoyed. What would happen is if they filled out that information, this is back in the day, it's gotten 10 times worse now, is that, they would get the initial calls, they didn't want to do anything. Then those leads started getting resold, right, to other people.
Correct.
So that initial core of 4 or 5 started growing to 20, 30, 40 lenders. And, it wasn't as magical as it was supposed to be. Now, listen, I did very well with it. I did fine with the Lending Tree leads. I was fine, but I knew it wasn't going to be for me long term. I actually very quickly wanted to transition into a traditional origination model. And so
you're such a relationship guy. Yep. And
my sales approach isn't super conducive to that. But you can make the argument that that type of sales approach is also part of what contributed to the bad reputation of mortgage originators back in the day. Not saying that everyone who did that was a bad originator. Not at all what I'm saying, because I'd be calling myself out, right? But I don't think that helped. But anyway, to your point, Lending Tree did not revolutionize. It did not kill the the LO. And I think AI,
bank rate, right?
What's that?
Bank rate was the same way.
Bank rate will work. We got annoyed.
All the data.
It's so funny. We got annoyed at bank rate when we were doing Lending Tree. Lending Tree got annoyed at bank rate. Like, good Lord. It's like we were putting out rates and stuff to try and attract people. And this is back before some of the regs really prevented some of the accuracy and that kind of thing. So they were very, enticing. Bank rate beating the hell out of us doing that. So we had to overcome the customer saying, hey, bank rate's offering me, 5.25. Why are you at 5.5? Like, oh, no, are they offering you that? Well, I saw it on their website. Isn't it funny? The same shit happens now.
The exact same thing. It's the asterisk. Isn't that what that little crazy thing is called? That is at the bottom that looks like a little star, and then another little star that says
the footnote, or
the rates include 2 discount points.
That's right. The fine print.
Right. And the DNA of your second-born child.
Yeah, exactly.
It's a rabbit hole, in my opinion. And that's how I feel about AI right now. If I really had to, and I'm sorry to all the wonderful engineers out there that have come up with it, and it's incredible and all of that. But to me, it's still a rabbit hole. And I'll give you some examples. The other day, I was trying to look up a regulation or something using it, and the data it provided was inaccurate, because what it's doing is scraping. So it's going out there and scraping all the data and bringing that back in and assimilating that, and then, passing that along to the consumer, let's call it.
Mhm.
And if the majority of the data is not accurate, I don't know yet how you source that piece, right? Because a big part of our industry, especially from a compliance standpoint, is those little bitty nitty gritty details that really do matter.
Mm.
So I just don't feel like AI is advanced enough right now to have an impact on our industry. Where I do think it plays a big role is right now we know the biggest challenge that we all face in the mortgage industry is the cost to produce a loan.
I was gonna say,
And
if I'm hearing you right, it makes an impact on the non-human aspect of it.
that's
Automation,
correct.
things that can increase efficiency, like you said.
Like bots, right?
Yeah,
We can do
exactly.
things
Things
in
that
the
make our
background.
human job easier, right? And it's
Correct.
just like Lending Tree and AI, very different things, of course, but it's all tech. And I think that's the running theme through our conversation here is that tech is not going to kill the LO or frankly the salesperson, especially not the ones that actually bring value, educate, guide, and advise. Bottom tier folks, order takers, yeah, they very well may get replaced by AI or something similar to that. Hell, you could argue that they already have to
Agreed.
to a degree, right? And I
Yeah.
think I think you're absolutely right though. Having that assist in our job and not replace our job is where we're going to do it. Yeah, but going back to your point about the accuracy of the information, right? If you don't pay for it, let's just take Chat GPT, for example, pick on them for a minute. If you don't pay for it, the information data is at least 12 months old. You do pay for it, it's the most accurate that they have for what they could find, but it's that whole trust but verified thing, right? You can't solely rely on it,
Right.
and you're doing yourself and your customers a disservice if you are, and you're going to shoot yourself in the foot too. Because right now, and you and I've had this conversation before. You could clearly see when something's been generated by chat, right? Yeah,
Now you definitely
yeah.
can.
Any type of GPT created content, for the most part, it can be very identifiable, especially things like articles.
Yeah, I may or may
Things
not have read the same paragraph in multiple
yeah,
people.
yeah, exactly. I mean,
Beautiful soliloquy that didn't write so well before. So
yeah, I
yes.
know, right? But like this guy can barely spell, and how is this coming out here?
Right. And here's my greater issue with that, not to get too philosophical, but
It's all
it's
right.
a podcast, so why not? I think that what makes a salesperson good, and I don't even like the salesperson piece because I honestly never considered myself that when was originating loans. I did not think of myself as a salesperson
Mhm.
because I really felt like what I had to offer was value added. So to me,
Isn't that
if you're,
interesting?
go ahead.
No, I'm sorry, I didn't mean to interrupt you, but isn't that interesting though? That of course you very much were a salesperson, but you did consider yourself because you had to fight the same preconceived notions that a lot of our customers
Correct.
think of when they think of salespeople, because you didn't want to think of yourself as that because you had bad experience because everyone thinks of it as a certain a certain context in a certain way, where in reality what you were doing was very much the way sales is supposed to be done.
And I think if we would have approached it, not we, because we weren't in the industry at this time, but I
Right.
think that's kind of where the mortgage industry went wrong is, and why we became so heavily regulated and the CFPB got involved and, Dodd-Frank and the S&P pulled out. It was crazy. And I think a lot of that was because there was so much focus on compensation and what people were making and very little research on the value added piece for those who did connect with an originator who had experience, who kept up to date on training and rent versus own and how to use your equity and different products, back to not just an order taker. There was never a way to value that, in my opinion. And that's where, when everything kind of fell apart, what was it, 2008, 9, and 11, there were so many.
It started in '07 a little bit, but primarily '08 and '09.
Right. So I can remember, and I don't know if you were originating that time, but I remember
Oh
this
yeah, I
very
was.
specifically. I was in my office. I worked for Sunshine Mortgage. Shout out to them. Loved them at the time. One of the largest private lenders in the Southeast. Just great guys and gals. It was like family. We really did care about our customer. And I was sitting in my office on a Saturday, and a client had come in, and we talked. This is when I took a handwritten app. I sat face to face with my buyer or
Mhm.
potential buyer and took a handwritten app and asked all the information that I needed to ask. And we talked about income, and they said, well, I have a lot of money coming in, but I don't really have a lot of income right now. And they were a younger couple. And I said, after, reviewing their information, and remember, I had bad credit and I dealt with all this, I advised them, hi, y'all are not really in a position to be purchasing right now. You're talking about trying to use future income. You don't really understand your ability to carry debt, your debt to income ratio. Which again, they were like, well, what's that? But we think we're going to get $1 million because our parents have this settlement. And they went into this long story.
Mhm.
So I denied them, and they went down the street and they got 100% stated income, stated asset loan
Yeah.
for a $500,000 home. I think it was actually a condo. And again, this was over 30 years ago, when in Atlanta, you could actually buy a condo for $500,000. And I later found out they didn't speak to me anymore. They unsubscribed from my newsletter. And I later found out that they were foreclosed on. And this is the truth. It's one of the few foreclosures that I was aware of, with someone that I had talked to. I had a pretty high success rate with my clients, because if you couldn't afford a home, I was not going to put you in a home,
Right.
right? So when you talk about AI, it may be able to look at something and go, okay, well, based on paper, if this person's going to get $1 million, maybe they qualify for a loan. The human element comes in to say, but you don't, because you don't know how to manage debt, and you don't know how to manage income because you're not making any. And if you get $1 million, which they ended up not getting, you see what I'm saying? Like, is there really a way to eliminate this humanity piece of it, to where someone is consulting or advising, etc.? It makes me think like about an attorney. You can, ding, put it in and get your little legal response back. But what about the rest of it?
Yeah.
And I think that's the conversation that needs to continue to be had in our industry. And I'm finding I help our loan officers with calls or sticky situations, which we all get into at some point. And I'm finding that the number one response I get back is, oh my gosh, thank goodness it's a human being, Adrienne.
Yep.
And I'm like, what do you mean? How else would we reach out to you in this situation where things have gone wrong? Oh, most people I've dealt with, I only get an email.
Mhm. That's crazy, isn't it?
In your life, Skip, how many emails did you successfully send that helped you deal with conflict? Or, you know what I'm
If
saying?
there's a conflict and I'm sending an email about it, it's because I want something on the record,
Right.
not because I'm trying to resolve anything.
Exactly. So then you kind of go back to the whole beginning of the whole idea of what we're supposed to, and I still say we are, even though I'm not well, I do still originate, so I can,
No, it's
yeah.
okay. You can still say we.
Yeah, I feel like it's we. I think that it's so important that we take ourselves seriously and we understand our value in this environment, because think about it, the rates, people get talking about the rates are so high, and the rates they are a little bit high, but they're more in line with where they need to be. And,
Yeah.
and people like you and people like me know that the only reason the rates were low was a government stimulus program where the government was artificially pushing down the rates lower to stimulate the economy. And
Right.
that's not natural for the amount of times that it occurred. So now that we're at normal, what I would consider almost normal, again, they are a little bit high. I would say high fives, low sixes would
Mhm.
be more of a normal range. If we were even at that and not at sevens, a lot of people no longer qualify, but I'm not sure that they should qualify on a 2 or 3% interest rate.
Right.
Because again, back to educating people, that's not the real world.
Yeah, well, it's you and I talked about this the other day. It's like getting the AUS findings for a VA loan, and you have the debt to income ratio is like 78% or something like
Correct.
that. Which to all my non-mortgage listeners, I guess I know that sounds shocking, but to my mortgage folks, you understand that a lot of times it'll actually spit out an automated approval on really high DTIs for a number of different reasons. But it's up to, and if let's say it goes to the human underwriter, they have to approve it based off. So it's up to the LO to say, hey guys, look, now there may be compensating factors, that kind of thing, and maybe some stuff in
Right.
the background, whatever. But it's still up to the loan officer to say, okay, what's driving this? What do y'all bring? Talk to me about what is really going on. So we can say, hey, yeah, I can go ahead and approve this or push this forward, or yeah, y'all may want to rethink this. So I can do it. That doesn't mean that we should do it.
That's right.
And that's the human difference.
Conversation.
Yeah,
Yes.
human difference. So tell me what would you say, would be your top 1 or 2 pieces of advice to originators out there who are struggling to find their place incorporating AI or whatever tech is out there? What would you say to them about, hey, look, keep your head up because of what we just talked about, or is there something else, something neat?
Yeah, well, I think that this may be shocking to hear from me too, because I have been in this industry so long and, I'm going to age myself and say, I've had a 50th birthday more than once. And and there's this rub, right? Maybe for people over 50s that we don't want to embrace new things. So I hope that you don't hear me saying that I don't think that technology has the ability to change our industry, because I absolutely do.
Mhm.
And I think using AI for those efficiencies, whether it's initial doc gathering or ordering an appraisal or title, I think that can create efficiencies that lower the cost of the loan, which then can lower the rates, which is a positive benefit to the consumer.
Mhm.
So I do find that AI, in my opinion, is going to be super relevant in that space. And where I would say loan officers need to make sure also that they're embracing what AI, what technology efficiencies can bring to the table. And look, I get it. I'll hear often, yeah, I still want to take a handwritten app and
Ah,
do this, do that. And look, I applaud you that you want to do that. Then take it on your computer
but we
and
can
allow that.
marry the two, and mortgage folks, just
Correct.
like bankers are, we're getting up there a little bit in age. It's like I've said 100 times. I'll be 44 this year. I'm considered a spring chicken by most mortgage
That's
companies,
right.
right?
You are.
And so, that's the thing. I think you're spot on. Basically, you're saying, hey, look, keep doing what you've done to be successful, but don't shut out new technology that can help.
That's right.
That can help amplify what you're doing. Because you also have to remember, you may like let's just take the handwritten app for example. I'm a big believer in talking with the borrower about
Agreed.
the application. But you gotta remember, it's also not just about you, the originator. It's about what's most convenient for that borrower. And the fact remains that taking an online application is more convenient for them. So it's up to us to
That's right.
utilize that technology and adapt, because I've never seen an online app yet that's 100% accurate or complete. So there's still opportunity there, but you can't shun the
Always the
technology,
human
right?
element. You are proving
Yeah,
my
there's
point is
always gonna
every
be the human
time
element.
we say
Keep it
software,
safe, people.
software
Keep it safe.
efficiency, you need a human being in this process. And I just am not going to back down to
No.
that you're going to need a human being.
Right. So, okay. So,
Your AI. I'm just kidding.
well, I know that we've been picking on AI just because it's the hot topic right now, but it really does apply. Just like you said a minute ago.
We're cool, Skip.
What's that?
We're hip. We're
Right.
into the
Because
latest, right?
we are on the cutting edge of technology, clearly. But you can insert any tech stack to this,
Agree.
right? You got to learn how to embrace it, how to use it fully. Not saying you got to become a tech wizard, right? You don't have to become a programmer or anything like that, but you just have to understand how to use it. Otherwise, you will get pushed aside for someone that is willing to do it.
You will. And another space, I think, in answering your previous question about what I think people are going to need to succeed in this industry or how AI is going to impact them or help them succeed, is another place I think AI is going to become instrumental is with your database. I've always been a huge proponent of loan officers making sure that you have an up-to-date and clean database. And where I think AI is going to become relevant in that space is going into the database and intuitively helping discover things like, this person has X amount of equity. Maybe they're a candidate to do cash out a debt consolidation, or, this for whatever that looks like with AI. I do think that we're going to see some movement in that space where AI can interact. And I'll give a shout out to our current vendor is Total Expert. I know they're dipping their toe into the AI piece. I would keep an eye out on that if I was a loan officer, that piece of AI and how to make sure that is potentially working behind the scenes in your database. I also think that if you are maybe even over 2 years in the industry or 4, I'm trying to think the last time a rate could be refinanced. I know people still refinance, but you know where I'm going with this, Skip. At some point, the rates will fall. And if you were a loan officer today, right now, January 28th, I would really encourage you in 2025 to get your database together, because there are going to be a lot of people that are in now the 7s, and we do a good amount of QM business, non-QM business, and 8s and high 6s. So keep your database relevant, up to date, ready to go with accurate data. And gosh knows, as someone who had ADHD before people even knew what it was, I know it's a tedious task to sit there and do data entry with your database. Maybe pay somebody hourly or come up with ways to keep that up to date. I think
Figure it
that
out one way or another.
it's going to be relevant. Yeah.
Yeah, it's funny you say that, because I remember the first time I met you was when you were at Sunshine and talking about your ADHD, right?
It wasn't when I had a telephone suit on.
Yeah, yeah, I know, right? So I was in there talking with folks about potentially being an LO there or whatever. And I remember you being in the office. You were floating around, like scurrying around. I shouldn't say floating. You were going as fast as you could from like cubicle to cubicle, office to office, trying to do something. And I just remember thinking, so I asked I was like, hey, who's this person going around here?
Yeah.
I tell you, and I was like, and so that was my first exposure to you 20 years ago. I run around like a chicken with its head cut off around Sunshine Mortgage.
And you knew the ADHD was there.
I knew it was there. I knew it was
I
there.
wore tennis shoes and I literally would pace and walk around the office.
Oh yeah.
So that's the real me for sure. And then you asked earlier too, I wanted to say one other thing about what I think. And I don't know if this is the question. I'm gonna share it anyway. Like I said, I've turned 50 a couple of times, so hopefully I've earned the right to say, if I could use one word for what I think that a loan officer needs, and it's a word I'm so freaking sick of, and I'll be real personal for a minute, it's resiliency. I was diagnosed with cancer during COVID. I could not see my loved ones. I may get upset here. And I think that some of the continuation of COVID and the isolation and inflation and all these things that have kind of been happening for the last 2 or 3 or 4 years in our industry, it really pushed me to my core. And I thought I was alone in that journey because I attributed everything to cancer. But now I speak to our loan officers every day, and there's so many in our industry who are just not in a good place, Skip. It's the change in our industry and being so busy for so long and then just having to scrap for everything.
Yeah, massive changes. And obviously we're not liking this to a cancer battle, but like at the same time, and I'm actually when I give my talk on 211 to the Atlanta mortgage bankers, this is going to be part of it. is,
Shout out for Skip
you
to
know, there you
11
go.
or
That's right. Yeah,
7.
be sure to be in attendance. But adaptability is something that we think of in terms of the individual. Like you have to be adaptable. What we don't realize is that adaptability is a team sport.
That's right.
You cannot become the most adaptable or get through certain circumstances without others helping you and encouraging it. It feeds off of one another. And that's something that we have to remember no matter what the market does, right? If it goes to shit or if it's booming, no matter what changes, it's all going to be a team sport.
And I think we lost some of that, right? And
Yeah.
I think to keep going forward on that is you're saying it perfectly, Skip. We need our teams in this industry. And that's the other thing, we were all pulled out, we're working remote, and we're not connected to each other.
It made it
And
very hard.
it made it very hard. And I really think that you're going to have to be willing in 2025 to know that what's been happening in our industry as far as rates and regulations, I don't think it's the end of it. I think if I were going to predict 2025, you asked me about the magic 8 ball, I think it's going to continue to require grit. Now, I work with 2 of the highest producing originators, I think in the state, maybe one in the country with Laura Whitty and Mark Milo. So it can be done. And I don't want
And that's what I tell folks is like, there are people closing loans out there, closing
That's right.
them.
That's right.
When you
So
were
don't make an
everything full time.
excuse. Yeah. You see what I'm saying? Don't think I'm going to let anyone make an excuse and say, oh, the market's so changed and blah, 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 blah. It has. But back to your adaptability word, these people have been willing to continue to adapt and change and be resilient, and closing 100 million and over 100 million with, I'm not talking about people with 20 and 30 people on their team. They have one person has one person on their team. The other person has maybe 2 people on their team.
Yeah.
It can be done. So what I'd like to share to the loan officers who are willing to stick in this industry is surround yourself with people on your team who want to work things out, who want to get better, who want to help you, who are also resilient, because I think the negative word that is going to make some people become extinct is rigidity. If we think we know it all, I don't think you're going to last in it this time. The whole, I'm going to do it my way. I've always done it this way.
Yeah. Yep.
I think you're going to become extinct.
Yeah. Some people will argue with me on this, but I'm gonna kind of die on this hill. The skills. So let's just say in your career, you close tens of millions of dollars in business year over year.
Yep.
The skills that helped you do that are the same skills that you have to have today, but they have to be in a different context. You have to put them with the lens of, modernity as opposed to 20 years ago. And so doing the same thing the same way, that's a recipe for disaster, like you said. Doing the same types of things the new way, that's where you're going to have success. That's why I think the seasoned LO out there, not going to be extinct if they know how to do that. That's the trick, though. We got to get the folks that have been veterans of this for a long time to try and take what's made them successful and put it through the lens of today.
I agree with that. And I think that what I would like to see in our industry in general, and this is for Highland also, is you and I keep talking about, we're the old guards, or not so much you, but, where is that new generation of loan originators, right?
Yeah.
And I think what I'd love to see, and what I know we're trying to work on, is mentoring and bringing in a new generation of mortgage. I like consultants more than I like bankers or sales, because I really think what we are. And I think that that new generation is more adept at technology. And
sure, that's the way it is with any newer generation.
Correct. So I think if I could say what I would like to see in our industry as far as a movement, I would love to see us get some younger people up and running in our industry. And then I say that, And then last week I was reading like, the average age of first time home buyers now something like 35.
Yeah, it's over 30 by most of the estimates. Isn't that funny though?
How
'Cause
many 30-year-olds do you know in industry? I don't know that many.
I can think of half a dozen off the top of my head quickly. It's tough. It's tough. And most of them are in the industry, but not originators.
Right. And we
Uh,
want you. That's what I'm saying. Here's my public announcement.
yeah.
Yeah, we need the younger generation in this industry because they also bring a mentality, I think,
Fresh,
that
fresh
it was
perspective.
correct.
Going back to what I said a minute ago, the younger folks in the mix, older folks in the mix, it's a team sport. Both can benefit from the other, right?
Right. No,
So
I love that.
I think we need to get you on an Uncle Sam I want you poster.
Yes, we
Yeah, you
definitely.
need to have the top hat on.
I
If you
want the
don't
hat.
have
Yeah, as long as I
yeah,
have the hat and
that's
everything
right.
out, right? Yeah, with my wrist brace, since I am starting out in the new year,
Wounded. Yep.
boxing gone awry.
Yeah, boy, you should see the other guy though.
Yeah, you should see the
That's
other guy.
right. So, all
And
right, before we call it a day, anybody that wants to get in touch with you, learn more about what you do, where should they go? What should they do?
I would call me
Oh,
and
look at you. Okay.
yeah, yep. My cell phone, and this is out to industry, hopefully no creepers.
Oh, well, I don't have any creepers that listen to the show.
Yeah, I would say my cell phone, and the easiest way to find that is on our website, www.highlandmtg.com. Again, www.highlandmtg.com. We are an Atlanta-based company. We are a company that's owned by originators, and I don't think that you see, and let me take that a step further, active originators. Mark Milam is the president of our company, and he is the one I referenced earlier that placed 100 million. So we get right originators, and this is our shout out for Highland. If someone is looking to make a change, reach out to us. You never know what could happen in this crazy industry. As we said, we may end up being friends for the next 20 years. And that's one thing, Skip, that I will tell you that I love about this industry is we are a tight-knit group of people who really have cared about each other. And we may not see each other for 10 years, like we saw each other at Sunshine or when you were with us at Highland. We care about each other. And so that is really neat. I don't think you find that in every industry. And I also love about our industry how people are able to evolve, including you, into now you're doing this show and you're helping people in a different way than being boots on the ground and originating. And I just want to congratulate you on that.
Yeah, thanks.
Because you are also inspiring people to live their dream. Just let me be corny for a second and really do what they're passionate about. And I've never seen you smile so big, although I always love your big, bold laugh. You seem really happy in this space. So kudos to you for, taking the bull by the horns and doing what you want to do. You're really good at it. And I'm honored that you included me on your show.
Oh yeah, it's been my pleasure. I appreciate that. And we're just getting started. Just getting started. So.
I've been wanting to say it.
Yeah, bring the big skip energy every day, right?
Love it.
Adrienne, thank you so much for coming on. I appreciate it. Looking forward to our next conversation.
Absolutely. Thanks for having me, Skip.